What if one of the most respected veteran traders in the world isn't looking at indicators, isn't watching news, and isn't chasing hype, but instead is using a decades-old chart pattern to read Bitcoin's future? A pattern so rare, so specific, and so structurally powerful that Peter Brandt calls it a compound fulcrum. And if he's right about what it's showing on Bitcoin right now, then the next major move might already be forming in plain sight. In a market where most traders rely on indicators, moving averages, and social media predictions, Peter Brandt stands out for one reason. He focuses almost entirely on classical chart pattern structures that existed for decades before crypto even came into existence. One of the most interesting among them is something he refers to as the compound fulcrum pattern. It's not a flashy retail trading term, it's not something you'll find in most beginner trading guides, but in Brandt's work it represents a very specific kind of market structure one that often appears before major directional expansion moves. And recently, traders have been discussing whether Bitcoin is forming something similar. What is a compound fulcrum? At its core, a compound fulcrum is a broad consolidation structure where price repeatedly tests both support and resistance over time, gradually tightening into a decision point, instead of moving cleanly upward or downward. The market expands volatility, contracts volatility, tests key levels, repeatedly builds pressure over time. Think of it like a coiled spring. Why Peter Brandt cares about this structure? Peter Brandt's entire trading philosophy is built on one foundational belief: markets do not move randomly, they transition through recognizable structural phases. In other words, price is not just going up or down in a chaotic way. Instead, it tends to move through repeating cycles of expansion, exhaustion, consolidation, compression, and then expansion again, and within that framework. What matters most is not predicting the exact direction early, but identifying where the market is in that cycle. That's where the idea of pre-expansion compression becomes critical, because in Brandt's view, the most powerful moves in any market don't begin during obvious strength or obvious weakness. They begin when the market looks deceptively quiet, but is actually building internal pressure. It does not tell you whether buyers or sellers will win. It only tells you that the battle is tightening and a resolution is becoming more likely. And that distinction is what separates structured technical analysis from narrative-based forecasting. Because in Brandt's approach, certainty is never the goal. Context is. So when he studies formations like a compound fulcrum, he is not asking, where is Bitcoin going? He is asking, is the market compressing in a way that typically precedes expansion? And if the answer is yes, then the only conclusion is that a significant move is becoming more probable, not predictable in direction, but in magnitude. How traders ARE applying it to Bitcoin. Some traders analyzing Bitcoin believe they are seeing characteristics that resemble a broader fulcrum, like structural phase. Not necessarily a textbook pattern in perfect form, but a market behaving in a way that shares similar traits. Extended sideways to slightly up movement after major volatility cycles, repeated testing of key support levels, without a decisive breakdown, multiple failed attempts to break higher, followed by rejections, gradual tightening of price swings over time, and long periods where volatility feels. Compressed compared to prior expansion phases from this perspective, Bitcoin is not simply chopping around or moving without purpose. Instead, it may be operating in a structural consolidation zone, where the market is actively balancing supply and demand at higher levels. This is why some traders describe it as structural tension building. And that resolution can happen in either direction depending on broader conditions such as liquidity conditions, whether there is enough buying or selling pressure to break and sustain a move beyond key levels macro pressure, interest rates, risk appetite, and broader financial market conditions that influence capital flows, market sentiment shifts, sudden changes in positioning, fear, or euphoria that accelerate moves once a breakout begins. Break of structural levels, the actual technical confirmation where support or resistance finally fails, and price accelerates away from the range. This is why professional traders focus less on what the pattern suggests emotionally and more on what level must break for confirmation. Because until those structural boundaries are broken with conviction, the market remains in a neutral compression state, not a directional one. And in that state, assumptions are dangerous because the same structure that precedes upside expansion can also precede downside acceleration. That's the core discipline behind Brandt's perspective. Respect the structure, but never assume the outcome before the break. The important reality check this is where many traders misinterpret the idea. They hear compound fulcrum and assume this means a breakout is coming up. But that's not how Brandt uses it. The correct interpretation is the market is preparing for a significant move, not that it has chosen a direction yet. That difference is everything. Because in real trading, structure tells you when volatility is coming, but not always where it's going. Why this matters right now, Bitcoin is currently in a phase where many traders feel uncertainty. Some expect a continuation to new highs. Others expect extended consolidation. The compound fulcrum concept sits right in the middle of that debate. What would confirm a breakout if Bitcoin is indeed in a fulcrum-like structure? Traders typically look for confirmation through clean break of key resistance or support, strong volume expansion follow through. Beyond the breakout level, reduced choppy back and forth movement. Without those signals, the structure remains incomplete. Final thoughts: whether Bitcoin is forming a true compound fulcrum or simply a broader consolidation phase. The message from Peter Brandt's framework is consistent. Markets spend most of their time building structure, and only a small portion of their time is spent breaking it. And those breakout moments are what define entire cycles. Right now, the question isn't whether Bitcoin will move. It's when the structure stops compressing, so you don't miss the next breakdown. And drop a comment. Do you think Bitcoin is still in a consolidation phase or already preparing for expansion?